Have you ever wondered how the world of trading operates? How the financial wizards maneuver their magic to churn profits out of thin air? Well, buckle up, because today we dive deep into the heart of this fascinating world. Trading, in its simplest form, involves buying and selling assets with the intention of making a profit. It's a battle of wits and strategy, a chess game with numbers. But where to start? That's the question that stumps most beginners. Fear not, because we are here to unravel this complex web step by step. Firstly, we need to understand the types of trading. There are four main types: day trading, swing trading, position trading, and scalping. Each has its own unique set of rules and strategies, and understanding these differences is the first step towards becoming a successful trader. Day trading, as the name suggests, involves buying and selling assets within a single trading day. It's fast-paced, exciting, and requires a keen eye for detail. Swing trading, on the other hand, is a more relaxed approach. It involves holding onto assets for a few days or weeks, waiting for the perfect moment to sell. Position trading is a long-term strategy. Traders hold onto assets for months or even years, betting on long-term trends in the market. Lastly, scalping is a high-speed trading strategy where traders make numerous trades in a day, hoping to profit from small price changes. To be a successful trader, one must also understand the concept of market orders and limit orders. A market order is a request to buy or sell an asset at the best available price in the current market. A limit order, however, is a request to buy or sell an asset at a specific price or better. Now let's move on to the concept of bulls and bears. In trading lingo, a bull market is when prices are rising or are expected to rise. A bear market, on the contrary, is when prices are falling or are expected to fall. To wrap up, remember that trading is not just about numbers and charts. It's a psychological game. Understanding market psychology, developing patience, and maintaining discipline are crucial in this field. So, to summarize, trading involves buying and selling assets with the intention of making a profit. It has four main types: day trading, swing trading, position trading, and scalping. Understanding market orders and limit orders and the concept of bulls and bears is also crucial. But most importantly, remember that trading is a psychological game, and developing the right mindset is key to success. So there you have it, a beginner's guide to the world of trading. Remember, every master was once a beginner, so gear up, stay focused, and let the world of trading unravel its secrets to you.